If you haven't yet traded the Micro Eminis, you're in for a treat today. Coming up in just a few seconds, our featured live trade. This is a fun type of trading, but it's also very risky. Most of the 170 plus videos on the channel are aimed toward teaching you how not to lose your money. So subscribe to the channel and let's get started. I'm a Tasty Trade affiliate, and that's the broker I use in all the videos here on the channel. And as you're going to see right now, we have everything on one page. Kind of see it, click it, trade it. Most of the featured trades here on the channel last less than 5 minutes, and they make profits of $10, $15, $30, $40, and $50, somewhere in that range. And we deliberately teach you to trade small because it's less risky while you're learning. I gotta tell you, learning to trade this way looks deceptively easy, but I'm gonna help you out because I use the same screen over and over and over again. Human brains love consistency and that repetition. That's how you get better at it. And in order to achieve the consistency you need to learn, I use the same trade setup. On the left side of the page, there's a bracket OCO order. It has the trade price, the stop price, and the target price. All three are right there. On the right side top is the 5-minute candlestick chart, and down below the trade signal indicator I use is the MACD. Some like to call it the MACD, I suppose. That's cool. Okay, now the trade's on. Two things. First, how do I determine that I was going to put that stop up there at 17,498? You see, in the blue, I shorted the contract at 17,491. Let me tell you something you don't know because it isn't on the chart. But I remember I didn't turn on my software and start watching the screens until about 11:30. I put the time up there on the chart. This trade begins at exactly 12:06 p.m., 36 minutes later. Now I'm going to highlight that 36 minutes with a green highlighter here so you can see it. There you go. That's 7 of the 5-minute candlesticks there in the highlighted green area. But look at the first 4 candlesticks in the purple square up there. The price was the same 20 minutes later from 11:30 till 11:50. No significant price movement at all. But look what happens with the next 3 candlesticks. That is a trend. A short one, albeit, but it's a trend. For more than 3 candlesticks is about 15 minutes. It's going down. So based on my experience of many trades, I'm willing to risk $14 that the price will continue to go down. It's the same mental process as a Texas Hold'em player makes a bet before the turn. And as a general rule of thumb, don't bet more than 1 or 2% of your account on any one trade. There is one more thing that you haven't seen yet that influenced my decision to make this trade at this particular time, and here it is. MACD stands for Moving Average Convergence Divergence, and that's exactly what happened there. We had a convergence of the 2 lines. They came together, and the green line went below the red line, indicating there's a likelihood of more momentum for the price to go down than up. Now, there are things in trading that you must know and other things that it's nice to know. What I'm going to show you now, I'm talking about the yellow rectangle in the right margin there. That is the scale for the MACD. I don't know if you can read it, but it's -17 and -21, which is well below that 0 line. Now, you don't have to know that because it's kind of redundant. The MACD tells you that crossover that I pointed out. But I just wanted you to know because it helps take in the information so your brain and eyes can work together to spot these trends. Okay, it's trade on right now. This is the live trade screen right here. Everything up until now, the previous 4 minutes, was setting up the trade. And the trade's not even going to last a full 3 minutes. I want you to know that once you hit that send button and you're in a trade, your task changes. You were looking to select a trade before, and now you go into a defensive mode of reducing the risk on this trade from the moment it begins. My eyes and my thinking are laser focused on only 2 things: the live trade price, which is in the orange circles, and Can I bring that stop down to reduce the risk on this trade? That is my job and my only job right now. At this point in a trade, you have no idea if you're going to lose money or make money. That was given your chance in trade selection. But once you hit the send button, you have to live with it. All you can do at this particular time is play defense. That's it. A lot of traders fail to understand that. They feel like if they're wrong and the market goes up in this trade instead of down and you lose your $14 or $8 or whatever it is, that you did something wrong, and that's just not true. This is inherently a risky type of trading. You're going to, over the long haul now, the long average, you'll have streaks of good and bad luck. You're going to win, if you're good, about 60% of your trades will make some money, and about 40% are going to be losers. The very moment I hit the send button that I entered the trade, my only job was trade selection. But after you hit the send button, it's game on, because you can't change a trade in the middle of it. There's no prayer or no magic or no mathematics that will turn a bad trade that's going to lose money into a good one. And when you understand that, you start getting an entirely different expectation in this kind of trading. All kinds of trading are not alike. This is stock equity index futures, and it has its own characteristics, just like option trading or stock trading. You know, I'm not a big, huge fan of sports analogies, but there is a football analogy that goes with this type of trading. After you hit the send button, you send the defensive team in. That's all you can do. As I told you from the beginning, this trade's going to last about 3 minutes, and so far I've reduced my risk from $14 to $8, and then I locked in a $5.50 profit, and now I just locked in an $18.50 profit in the trade, and I was stopped out. You may have noticed my stop was at 17,481 3/4, and I was filled at 17,482. That little quarter point difference worth 50 cents. It happened because I used a stop market order. My trigger price, 17,481 3/4. The market traded through that, and I got the next available order and was filled at 17,482. I'm going to show you now maybe the most important part of this entire video. If you purchased my book, you see on the next to the last page there's a little saying called balance. It's all about what is not there. I'm going to show you how that relates to your trading in just a moment. 30 spokes unite at the wheel. It is the center hole that makes it useful. Shape clay into a vessel. It's the space within that makes it useful. Cut out doors and windows for a room. It is the holes which make it useful. Therefore, profit comes from what is there. Usefulness comes from what is not there. In the type of trading that we do, perfection is not there. And that's because, very simply, in this type of trading, you have to make decisions. You must make decisions before you have all the facts. So perfection is impossible. And here's the rest of the list that I came up with. Hesitation. You have to make decisions fast sometimes. And that's a thing you can learn. Indecision, overthinking, fear of losing money, greed, fear of taking a profit. Now, I think greed and fear of taking a profit are probably brothers. The last on this list is rigidity. You know, you have to change things. You don't change things because you lose trades. You change things because you want to trade better. I say it all the time. Trading happens between your ears. Help me out, please. Click that like button if you want to see another video that's similar or like the one you saw today, and hit that subscribe button. Join our 24,000 plus subscribers, and have a great week. I'm Don Singletary, and I hope every day is a payday for you. Thank you.